Left for a change is Krishna Kumar and Suyash. Let's quickly begin with markets. Markets opening in the red. Sensex down by about 400 points, Suyash, this morning.
Yes, Shweta. So Indian markets had a muted opening today. Both Sensex and Nifty are down about 0.5% each. Sensex has slipped below the 65,000 mark, although Nifty is defending the crucial support level of 19,300. Now, the weakness today is on the back of bearish sentiment in the global equities. Also, investors are waiting for the inflation print, which will come out later in the day. So now retail inflation is expected to exceed the 6% mark, which is way above the tolerance of RBI.
Yes.
And this will be because of higher food prices, as we have seen over the past few months. Tomato prices and then vegetable prices have surged a lot, and this will have a negative impact on inflation, and the print is expected to come at 6%. Now Sensex is down about 0.58% currently. Nifty is down about 0.86% and 19,309 levels. Mid cap and small cap indices are also trading in the losses. They have underperformed the markets and they are down about 1.22% and 1.68% in today's morning trade.
All right. Is this the much needed correction in the market? Is it the start of it, or are we at the bottom of it? Given Friday's profit booking and this morning.
So this was actually the third straight week of losses for the Indian markets, and we have seen that Indian markets, at least at the higher levels of about 19,900 levels, faced a lot of resistance, and from there we have seen profit booking, and in the last couple of weeks they have been consolidating in a tight range of about 400 points. So 19,200 has emerged as a support for the Nifty, and 19,800 has emerged as a resistance for Nifty.
Okay.
Although now we are seeing that in the midst of negative sentiment towards global equities, Indian markets is underperforming even the emerging markets, and it seems that the Goldilocks situation of Indian markets is currently under question.
Oh, big words coming in from him, Shweta. The Goldilocks situation of Indian markets. Because Suyash, I think Shweta and I have been talking about this even before we began. The question always is, when you see the markets coming after the kind of month of July that we had, every day was a high after high after high. We're into August, 2 weeks into August, every week we've been talking about a fall in the markets, closing in the red for the day, for the week. And when we began July, Suyash, all three of us were discussing the same thing. When is this correction going to come? Because so many market experts predicted corrections. So the first question, we have market expert joining us as well, Shweta, but if with your permission, simple question.
Yes.
Are we at the beginning of a correction, of that expected correction?
I mean, as far as the cues go, it doesn't seem that big downside is in the offing unless and until there is a big trigger for the markets, because we need to understand Nifty and Sensex have been defending that support levels vigorously, and that's where, at least as far as if there is not a major trigger, we should not see profit booking, but we can see consolidation over the next week or so.
Okay.
All right, some sort of consolidation expected in the week or so. We are, of course, hoping to get our markets guest very, very shortly. But let's quickly also move on to earnings. Big earnings that we're tracking this morning. What are the expectations with ITC and Vodafone?
Yes, Shweta. So let's start with Vodafone, and Vodafone, as you know, the troubles are expected to continue now.
Just like their signals. Just like the phone signal, the troubles just never stop with Vodafone Idea phone signals.
Now Vodafone is expected to report losses, although the losses...
Let's do ITC first. Let's pull up those numbers for ITC.
Fair enough. ITC, a conglomerate that sells literally everything under the sun.
Absolutely. One of the perhaps biggest FMCG players. Numbers on our screens, Suyash. Numbers flashing on our screens. Let's have them back, please.
Now, ITC, Shweta, is expected to report a double-digit growth in net profit for the quarter ended June, driven by a steady growth in the cigarettes and the hotel business. Now, net profit is expected to rise about 15% on a year-on-year basis, although revenue will correct marginally by about 1% on a year-on-year basis to about 17,152 crores from 17,325 crores in the year-ago period. Now, the growth in profit, although the top line will be muted. Now, this is because of ITC's higher dependence on the cigarette business. Now, despite a scale up in the FMCG business, cigarette continues to constitute about 70% of ITC's profit and about 45% of its revenue. So that is expected to be a major drag on the top line of ITC, although margins are expected to improve by 430 basis points on a year-on-year basis to about 37% in this quarter compared to 32.7% in the year-ago period.
All right. I'm not sure if we have Vodafone numbers just as yet, but we have Avinash Gorashakar, Director Research, Profit Mart Securities, joining us here on the show. Sir, thanks very much for taking time out. I want to first begin with markets this morning, opening in the red once again, alluding to what my colleague Krishna here said. Is this the beginning of a correction?
Yeah, good morning to all of you. First of all, I think, the markets are now into a consolidation, scenario. Most importantly, we are still in the midst of earnings season. So I think the broader market is unlikely to go beyond 20,000 for the time being. And what correction we are, seeing is largely because for the last week or 10 days, we've seen a consistent selling from the FIs. I think after the US Fed policy and from the recent RBI policy, it's very clear that there are some concerns emerging that inflation has yet not peaked out. There could be a little bit of pain on the inflation side. And my sense is that typically, I think now at this level of the index, the incremental alpha or the incremental upside to many sectors across many companies is unlikely to be significant. So I think you're going to see a lot of profit booking coming in. Maybe at 19,200 or 19,300 odd levels, the market could stabilize. And this correction is indeed a healthy kind of correction, because probably investors who missed out the rally earlier could get quality companies at decent valuation. So it's nothing of a kind of a panic scenario. But yes, I think the markets could undergo a little bit of pain in the very near term.
Ask you just a supplementary question to what Shweta asked. I always felt that consolidation is a sweetened word for correction. So my point here is that, how long are we going to see this correction? We're seeing support levels for Nifty at 19,200. With the kind of news that's coming in terms of FI outflows, interest rate environment in the US and India, is there going to be a prolonged period of correction, and will Nifty and Sensex test their current resistance levels and go below them?
Yeah, I think if you have seen the way the markets have gone up since April, I think they went up significantly in a very short period of time. So I think, the law of gravity tells us that whatever goes up very fast comes down also equally faster. So I think one should not be surprised that for the next, say, couple of weeks at least, or maybe even for the next 3-4 weeks, the markets are will undergo a little pain. A lot of easy money has been, generated by investors. New issues, IPOs have also come up quite significantly. So I think to a certain extent, there could be a break in the kind of momentum which all of us have been used to. So I think there's nothing fundamentally wrong, but I think this healthy profit booking could be a little painful for the next, say, 2 to 3 weeks. And after that, hopefully, what kind of news flow comes on the macro front, what kind of news flow comes on the company specific front is going to drive prices. But valuations have definitely gone skywards, and I think some correction was necessary. So I think even if the market corrects, I think this is a very good time for investors. The speculator may not make any kind of big money here, but the investor who puts money in good quality companies and patiently waits would definitely see a decent alpha coming in over the next, say, 12 to 15 months.
Avinash, the markets, as you said, could be under pressure for the next month or so. So, is will it be prudent for an investor to, initiate a a sector-specific approach at this point of time? And if so, what sectors can one invest in?
No, I think one has to be a little stock-specific as well as sector-specific. And I think, the sectors which actually should do well are all the domestic facing sectors. I think I would avoid the export facing sectors because still there are significant headwinds from US and Europe. So I think, domestic sectors like automotive components, capital goods, real estate, building products, typically cement, these are sectors which we feel are definitely poised to do quite well, considering the kind of massive opportunity in infrastructure. Another 2 key sectors could be, on declines would be the railway infra theme, the defense theme, because these are also large pockets of opportunity over the next, say, 12 to 15 months.
What about consumption stocks, Avinash? Because we have seen that consumption stocks have posted a good set of numbers, at least as far as the bottom line goes, but the volume has disappointed the streets. Now, the reason for that heightened profitability was because the raw material prices had decreased and primarily because the crude prices are falling. Now that crude prices are going back up, and the demand is not there, profitability is expected to take a hit. So will we see some profit booking there?
Yeah, I think first of all, most of the consumption stocks are not priced, very cheaply. They're available at fair to expensive valuations. So if you look at Hindustan Lever or typically a Godrej Consumer, these companies have done decently well in the quarter one. But as you rightly pointed out, the volume growth has been quite disappointing. Crude prices have started moving up, and inflation still remains at elevated levels. So I would believe that maybe at little lower levels, that could be a good opportunity to accumulate such branded consumer bets. But my sense is, I think it's better to wait for the September quarter and obviously then take a call on the monsoon factor plus the inflation factor. And I think that would be a better time to look at these companies. At these valuations, the risk reward bet, I wouldn't be surprised, would not be that attractive for investors, because these are fairly expensive kind of stocks where the risk reward is already built in into the price, at least partially.
Now, Jefferies has flagged that and asked investors to be cautious about Indian markets in light of crude rallying, China gaining some traction, and inflation being a concern. So, do you agree with the assessment of Jefferies?
Yeah, I think clearly, you have to look at the broader market. Overall, if you look at only the index-based stocks, then I think definitely most of these index-based stocks from the Sensex and Nifty are fully priced. But if you look at the broader market, there could be pockets of opportunities where, the risk reward and the valuations could be in favor of investors. And I think, inflation is going to be a major concern. In fact, in the recent RBI policy also, although the rates were kept status quo, on the CRR front, what the RBI has done is clearly to control liquidity. So I think, inflation is something which probably post monsoon we'll get a better sense as to what is the kind of number, RBI is comfortable with. But I think at least for the next 2 to 3 months, you could see a little bit of consolidation in the markets, considering that April onwards, the markets have been on a tearing runaway rally. So I think this correction was anticipated, and I think one should take a slightly longer term approach here. There's nothing to worry, but yes, in the near term, I think the markets would be continue to be little volatile and sluggish.
Nash, we just discussed this as well. Big earnings coming out for the day in terms of the form of ITC. Profits up, revenues marginally down. Great improvement in margins as well. Profits up, revenues flat, great improvement in margins. How do you view the ITC results per se? Still heavy dependence on the cigarette business. Talk to us from ITC's results and as well the stock going forward.
No, I think, ITC stock has seen a runaway rally, largely because of now the factor that the hotel unit is going to be demerged, by next year. But I think coming to the operational earnings, I think one major disappointment is that the top line growth has been almost flattish and the margins have improved. So I think cigarettes are definitely, currently almost 70% of its revenues and profits, come from the cigarette business. So I think what kind of outlook and what kind of volume growth numbers are shared by the management is very crucial to hear. The numbers are definitely on the bottom line quite positive, but I think the markets would like to get a hint as to what is the kind of incremental growth from the other divisions, especially the hotel business, the paper business, the FMCG business, because these are all additional growth drivers. And I think, any positive commentary on that would obviously be a little bit sentimentally positive for the stock. Longer term, we continue to be positive. We believe that any decline in ITC share should be used as an opportunity to accumulate. There's significantly deep value in the stock. But yes, I think the time frame has to be a longer time frame. ITC has been a slow mover. So probably, numbers may not immediately get reflected into valuations. So I think you need to put in a little more time here. But yes, the conviction is strong that this company should comfortably deliver very strong numbers for FY24.
Avinash, ITC, talking about ITC was also in the news, a month ago with its, reports that it's going to demerge its hotel business. Although the market usually, the news of demerger should be taken positively because ITC as a company can focus more on the hotel business if it's, if it is a separate entity. The market did not react very positively to it. Any reason for that?
No, I think because clearly, in case of the ITC demerger, ITC clearly said that they would continue to hold about 60% in the new entity, and the remaining 40% would be, obviously be, offered to the other shareholders. It means that clearly it was not a clear, plain vanilla kind of demerger. I think that was something which disappointed the markets, and I think the overall fair value which most of the analysts have given is that the ITC share fair value in the overall ITC share is not more than 30 to 35 rupees. So I think that is one reason why, despite being number 2 player after the Taj Group, we could see we saw a little bit of disappointment once the deal was announced. Obviously, once the stock gets listed and obviously, we see traction on that kind of business, at that point of time, we could see some re-rating. But at least as of now, there's no major excitement on that event after ITC clearly stated that almost 50 to 60% of the combined of the new entity would be controlled by ITC.
Let's move on to another earning that we'll be tracking this afternoon, and that is Vodafone. Vodafone as a business has been losing money, has been losing subscribers. We'll play up the numbers as far as expectation is concerned. But how are you looking at Vodafone right now, Avinash?
No, I think, Vodafone India has been on a kind of a falling kind of a market share scenario from a very long time. We have been seeing that both Bharti and Jio have been grabbing market share, have been grabbing customers. And on the other side, Vodafone has been losing customers. On the capital structure side, the company seems to be in a very big trouble spot. I think they have a gross debt of almost 1,23,000 crores. They have a negative net worth. And I believe last year they made a net loss of 29,000 crores. So unless they get funding, and that too funding very quickly, either from the, existing management or maybe from a strategic investor, which, the markets have been hearing for a very long time. In fact, the market rumors have been that Tesla could be interested in Vodafone, and that was why the stock, actually saw a smart bounce. But these are unconfirmed reports. My sense is operationally, the company has been doing very badly in terms of the cash flows, in terms of the debt on the books. So I think it's better to wait and watch. There's no need for any investor to make in a fresh entry here. The numbers this time also are going to be pretty bad, considering that April, May, June, they lost a lot of the customers to both Jio and Bharti. So I think, this is something which the markets are uncomfortable. If the company continuously loses market shares, has a huge debt on the books, then I think recovery seems to be a very tough call from here on.
Recovery seems to be tough, and this is a story that we've been discussing here. Vodafone losing business to the duopoly that is emerging in the telecom sector by the way of Jio and Airtel and Vodafone. Of course, its numbers not looking that great for the months gone by and for the months coming ahead, because there is no strategy, Krishna, that is in place right now. Talks of Tesla buying a stake, talks of government, increasing its stake, all of that, of course, continues to augur well temporarily for the Vodafone stock. There is a bounce back, smart bounce back, as Avinash put it, but then again a fall therefore in the fortune. It continues to persist for Vodafone. Let's quickly take a look at the earnings preview that is on your screens at the moment. So quickly run us through the numbers, Suyash.
So actually it's a net loss figure. So Vodafone is expected to post a net loss of about 6,895 crore, which will be less than the year ago loss of about 7,297 crore. So about a 15% contraction in losses, although on a sequential basis the losses are expected to widen. Now revenue on the other hand is expected to go up marginally because of the increase, because of the improvement in the ARPU, and it's going to be it's expected to be up about 1.5% from 10,413.79 crores to 10,570 crores. Now the brokerages are expecting Vodafone Idea to lose about 3.2 million subscribers in the quarter gone by, and they expect a 1.7% quarter-on-quarter increase in ARPU to about 137, which is a far cry, if you remember, from Bharti Airtel's 200 figure. So, yeah.
Absolutely, a very far cry from Bharti Airtel's figures there, but Vodafone juggling and hoping to keep its fortunes intact, whatever remains of it. We'll come back to you, Avinash, but let's quickly also move on to another company that is in the news, since Saturday, and that is Adani. Let me also introduce on the show my colleague Avijit is joining all the way from Kolkata. Avijit, good morning to you. Adani continues to be in the news, and for all the wrong reasons.
Before we go,
yes,
Suyash, if you can take us through the Adani stocks this morning. From what I understand, all Adani Group stocks are down in the red this morning, Suyash, isn't it?
All 10 Adani Group stocks are in the red, and they have corrected by 3 to 5% in just today's session. Now, Adani Enterprises is leading the race as far as the losses are concerned. It's down about 5% on an intraday basis. Adani Ports is down about 3.11%.
There you go.
Adani Wilmar is another one. It's down about 2.3%. Now, all three companies reported a good set of numbers, but we are seeing some correction. Also, Adani Power logged some losses of about 3.35% in the morning trade. Adani Green was also down about 2.34%. Adani Wilmar, Ambuja Cements, ACC, all of them are in the red.
Sea of red wasn't Shweta, unexpected because the kind of news flow that we've seen over the last couple of days and what day it is today. Shweta, two things. One is what happened with Adani Port, Deloitte exiting Adani Ports, and second is the fact that SEBI report on Hindenburg's claims on manipulation in the Adani Group stocks, that today is the deadline for SEBI.
That report to be crucial report to be
filed in the Supreme Court,
which is going to do one of the two things: A, give a clean chit to Adani.
Right.
B, not give a clean chit to Adani, and in which case we're going to see further news coming out of Adani Group. But let's quickly understand what happened on Saturday.
Yes.
Let's get Abhijit back. Abhijit, Deloitte resigning as the auditor for Adani, saying that we wanted, more transactions to be looked at closely, but Adani Group denied. They said that transactions need not be looked very closely, and in fact it wasn't needed, or there wasn't any further research needed for those specific stocks that found mention in the Hindenburg report. News is going to be a dampener for Adani.
Yeah, Shweta, good morning. I think this is perhaps the biggest blow to this can deliver in the eyes of the market and the investors, the biggest blow since the Hindenburg report. Because what is at stake here is credibility. That takes, that is the first victim here. I think the way the markets are reacting is primarily because of the Deloitte exiting the company. What, perhaps the group would have done, it's a huge group. It has got, I'm sure, the best legal brains and the best market advisory brains. But I think just to allay fears of the investors, they should have, gone ahead and perhaps disclosed everything. Now, that's essentially from the investor point of view. Let's also remember that despite the sharp fall and the wipeout of the market capitalization of the group since the January 24 report, what has singularly helped the Adani Group is this huge bull run in the Indian markets. Just imagine what the situation would have been without this huge bull run for the last 3 months that we have seen. The stocks would have, I mean, it's anybody's guess where the prices would have been. So I think, irrespective of what the SEBI report says, Deloitte exiting the company, and Deloitte is not, a mom and pop sort of
absolutely
auditor group. So, it has got a lot of credibility hit, and what I think is the group is suffering right now is that credibility crisis. It should have tackled perhaps the thing better.
All right, the credibility crisis seemed to be hurting where it hurts the most for Adani, that is the group stocks. Avinash, all of them in the red. What is your assessment? What's happening here?
I think clearly, I think there's a credibility issue because this Deloitte, disclosure on the exchanges has actually hurt the market sentiment very badly. February when the Hindenburg issue happened, I think there was a free fall in these companies, and I think some amount of salvaging was done by the companies, by the Adani Group, by reducing the pledge, by reducing the debt on the books. But I think this kind of, development is definitely something the institutional investors will be little wary. So my sense is that, I think let the water settle down. The management has given their clarification, but the markets would take a little more time to digest this issue. I think overall the markets would be looking at the kind of growth trajectory and the earnings growth from all these companies. In case, growth takes a backseat, then I think you're going to see a further sell-off here. But broadly, I would believe that, at this point of time, it's not the right way or the right time to actually buy into these companies. I think it's better to keep away for some time, because this news would definitely have ramifying impact on almost all the companies. We are seeing almost every stock in the Adani group is down today, and this may continue for some more time before, I think we get some further positive news flow from the group, but definitely a matter of concern. So I think I would keep away.
All right, Avinash, thanks very much for joining in with all those inputs. We'll, of course, keep coming back to you as and when we can, but thanks very much for taking time out this morning. Krishna, all in all, before we move further to what is expected today, Deloitte resigning, I think Abhijit said something very interesting. He said it's not a mom and pop store, which is a comparison to not being a very small brick and mortar, small sort of business. It is one of the big 5 auditors in the world. So when Deloitte resigns, your credibility takes a hit, especially when it comes on the back of Hindenburg report. That report that pointed to a lot of other things, among which were discrepancies in some of the financial transactions made within the group companies, and Deloitte said we needed to look into these transactions. Adani denied, and hence the resignation. All in all, I think I'm in agreement, and I likely to agree with what Avijit said. It is the second biggest, I think, hit on Adani Group credibility up after Hindenburg.
Yeah, and the stocks this morning in a sea of red are reflecting the kind of hit. I mean, Suyash would remember, when the first Hindenburg report came, these are the kind of percentages in the red that we saw in Adani stocks the day the Hindenburg.
On a day-on-day basis.
On day-on-day basis, 4% down, 5% down, 3% down, 3.5% down, and that's why it's a little scary right now, the way the charts are looking, from the it's reminding us of Jan, Feb of this year. It's like we've gone back in time by 6 months, taken a time machine. That's the kind of impact that piece of news has had. And Shweta, we've been also tracking the story of how SEBI and the Indian government are making sure auditors become responsible for any financial mishandling within any company. And the new rules say that even if you resign, so
you will still be held
you will still be held responsible. So Deloitte, to me, the way it looks right now, Suyash, correct me if I'm wrong, Deloitte is worried about all these new restrictions that the government and SEBI is planning to place on auditors, holding them accountable, holding them, saying that like it's your job. Audit is a matter of looking into financial transactions in the books, and if something is wrong, how can the auditor not be responsible? How can the auditor turn around and say, we told them, the company didn't listen? So far, strangely, that's all that's happened with Deloitte. Deloitte has said that in May 2023, they raised these concerns within Adani Ports. We're not talking about all Adani stocks, all Adani companies. We're talking about Adani Ports and SEZ. That's the name of one company. So this particular news that came out on the 12th of August, Saturday, there was a 163-page BSE filing in which Deloitte made it very clear, we told Adani Ports' management that there are problems. There is not sufficient appropriate audit evidence. These words are very important. Sufficient appropriate audit evidence not available. Whereas, and that's the reason why they raised those concerns in May, and we are in August, and Deloitte has said enough is enough. We've already resigned from other companies. It's the only one left. Now we're exiting this company. So what this essentially means is that Deloitte is not just exiting Adani Ports and SEZ, Deloitte is exiting the Adani Group per se. And for which Adani has responded back and said that, they resigned because we weren't going to give them the mandate to do the audit for other Adani Group companies. So it's a little tit-for-tat game that's going on between Deloitte and Adani right now, as we speak. And as you are telling, you were wanting to discuss that next topic, which is about the SEBI report being filed in the Supreme Court on the investigations of the Hindenburg claims. This is just terrible timing. Absolutely terrible timing that Adani Ports news comes, that Deloitte exiting Adani Ports, and 48 hours before
come to think of it, Krishna, this could also alter Adani's fortunes if that report comes in favor of Adani. And that's a big if. We don't know what's going to be a part of that report.
I'm reading market sentiment. Market sentiment, it doesn't sound like that they are expecting a clean sheet from SEBI, because if they are expecting a clean sheet from SEBI, you would have seen some of those stocks at least flat. Not like 4 to 5% down. What's this? Correct me if I'm wrong. Am I reading the market sentiment right?
Yes, but to Shweta's point, if the report does give it clean sheet, I'm countering Avinash's point over here. This will be a good time to enter the group stocks, because we have seen Adani Ports, Adani Enterprises have been one of the best performing stocks since the start of the financial year 2024. Adani Enterprises up almost 50%. So investors who missed out on that bounce back rally can take these small corrections to enter the bandwagon right now. So
okay, hold your horses for a second. I know stock market's all about buying in dips. Be it the index or be it individual stocks or sectors, it's all about buying in dips. The market man that Suyash is giving us, investment tips on what we should be investing in, because it is a dip. So all those watching this broadcast should remember that Adani stocks are on a dip right now. If you want to take a punt, it's a good time. But my question is this, what about the longer term credibility? Because that's the fear.
But SEBI's report is going to be either a clean sheet for the credibility of Adani Group, or it's going to further bungle up whatever is existing credibility remains. So I think it's a very crucial report, because the expert committee that was constituted by Supreme Court literally passed the buck to SEBI.
Exactly.
And let's get in Abhijit into this conversation. Abhijit, the SEBI report on Adani, and as we were discussing, is going to be either a clean sheet for Adani Group, which is much needed at this point in time, or it's going to, you know, perhaps give some more momentum to the already existing doubts around what Hindenburg had to say. And let's put those graphics on the screen to quickly understand what Hindenburg had claimed and what Adani, what SEBI is going to look into. Abhijit.
Yeah, Shweta, absolutely. But what I feel is the market is not going to treat the SEBI report on its own and on a standalone basis. They are going to combine the Deloitte exit and the SEBI report and then take a holistic view on the Adani, the fortunes of the group or the credibility or their outlook on the group. So, but coming back to the SEBI report, I think there are two clear areas which the report is going to focus on. One is obviously the minimum public shareholding norms, where there has been a breach as alleged by the Hindenburg report. And the second is there is, some related party transactions. So a disclosure on that, which allegedly the group failed to do. So, and if the market gossip is to be believed, that the minimum share of public shareholding norms, SEBI is perhaps not going to find too much breach on that. But on the related party transactions, which Deloitte has already indicated in its letter, this 163-page resignation letter, I've never heard of such a voluminous resignation letter. So I think that is something that the market is there for the SEBI report, but we have to find out. And tomorrow, I think, will be the real day, the test of what the SEBI report can do or undo for the group.
All right.
Oh, sorry, tomorrow again being a holiday. Perhaps we have to wait till Wednesday. Yeah.
Day after tomorrow would be the test of what SEBI report has not done.
Because tomorrow is a market holiday.
Tomorrow is a market holiday, but that report, of course, crucial report, is expected to come out today. We will get you all the details as and when the report is tabled, if the report is made public.
Yes.
We don't know that just as yet, but let's quickly move on and track another important story that is coming by the way of NRIs.
Yes.
And this is a story of NRIs making money, and not just making money, Krishna, sending it back home.
I mean, the story is one of the happier stories this morning, because let's bear in mind, NRIs sending money back home is not new. It's the raison d'etre why most Indians go and become, most resident Indians go and become non-resident Indians. Then they want to send money back home. But the fact of the matter is that entire process was stuck during the pandemic. And obviously, because people were looking out for their own jobs and their job security and their finances, it was terrible time. So for financial year 2021, it had become completely stuck. It wasn't growing. But what has happened with financial year 2022-23, which just recently concluded, is that those remittances, Shweta, are up 26% to over $100 billion, over $110 billion. Let me just quickly take you through these numbers, which are interesting. FY23, financial year 2023 remittances to India. Remittance to India, by that we mean personal transfers by NRIs to their families back home in India. That is up 26%. That's what we mean by remittances up 26% to $112.5 billion. And of course, this has all been backed by the fact that, Shweta, there has been a great demand for Indian professionals, all kinds of Indian professionals. We already know the number of Indian CEOs of global MNCs. But it is not just about the CEOs, but it's about professionals at all level really being in demand. So they're earning in dollars, they're earning in euros, they're earning in dirhams, you name it. They're earning in all kinds of international currency, and that's the reason why you're seeing one of the reasons why you're seeing this increased remittances. Apart from the fact that FY 2021 wasn't all that great, sustained and fast-paced increase in personal transfers. Because of all that I'm talking about, we're out of the pandemic, there's more job security, more Indians getting jobs across the world, all that auguring well when it comes to sending money back home. Why not? And this is important because this had to be back. This is one of those things that couldn't have possibly dipped. The only reason why it dipped was because there was a pandemic going on. And you compare this is money being sent on a personal capacity by Indians not residing in India to their family over here. In an official capacity, when it comes to companies pumping money into India, which is called FDI, foreign direct investment, that is now down to just $70 odd billion from $84 odd billion. So for the last financial year, foreign direct investment is just about $70 billion, whereas personal money transfers by non-resident Indians to resident Indians is over $110 billion. That is a very telling statistic, Shweta, isn't it? And the fact
Very telling.
Very
Absolutely.
telling.
What does it tell you? It tells you that Indian resources are perhaps better than Indian infrastructure, if that is the right
Indian
comparison
talent,
to make.
nothing
Indian
matches.
talent, nothing beats Indian talent.
Nothing beats Indian talent, nothing beats Indian minds, Indian intelligence, Indians' adaptability. If so many Indians are in demand as professionals across the world, it means so many Indians have to go to some of the far-flung parts of the world, work there in completely, unfamiliar surroundings at a time when the global economy, is on the boil. This just talks about the Indians, the average Indian's ability to be adaptable, resourceful, intelligent.
One of the best
effective.
talents out
Yes,
there. Let's quickly get in Avijit, who wants to come in here. Avijit.
Yeah, I have, this putting these figures in perspective. I have done a small, that back of the envelope calculations, and if you take this in rupee terms, the remittances amount to 9.33 lakh crore, right, last year. Now, what does it mean? It is 1.3 times, 1.35 times the entire budget for this financial year for our largest state, Uttar Pradesh. It's 1.7 times the budget of the Maharashtra government, 2.55 times the budget of Tamil Nadu government, 2.85 times the budget of Karnataka government, and 3.45 times the budget of the Gujarat government. All these, are our front-running
I'm
states
surprised you didn't
in
include
terms
the West
of
Bengal
industry.
government, West Bengal economy figures in this.
2.75 times.
2.75 times. There you go. 2.75
Yes.
for West Bengal, 2.8 for Karnataka. Fantastic numbers, Avijit. But also, did you also notice? I want to ask you. Did you see this in FY21? For FY21, if you see where those remittances came from, Shweta and Avijit, overwhelming, more than 23% of the remittances come in from the USA. That's number one top, as far as remittances into India is concerned. Number two is UK, and then you have UAE, then you have Singapore, and then you have Saudi. That literally tells you that, as far as UAE and Saudi are concerned, where that money is going into. It's going into Kerala, largely speaking, overwhelming part of the money from UAE and Saudi Arabia. But as far as the rest of the countries are concerned, USA, UK, and Singapore, that's a good, nice Cosmo mix. All kinds of Indians go to USA, UK, and in fact, as Singapore as well. Avijit, that trend, that is not going to change anytime soon, isn't it? These numbers can go up and down, but the contribution of remittances by these countries are going to remain the same.
Absolutely. I don't think the relative share is not going to go down, at least in the near or medium term. But, there is another study which I think that we don't have that yet. But if we could have, is that how much of this 9.33 lakh crore rupees came state-wise. I think that's a very interesting topic.
Absolutely.
That one can, perhaps a number crunching, that one can do actually.
Another
point to note in terms of remittances, India is perhaps the only country, perhaps the unicorn remittance country, because $100 billion, no other country I think has achieved.
All right.
So, fair enough. We'll have to.
Those are interesting numbers.
Avijit, I will try to get those figures next time we have a chat. I think that should make for a very interesting conversation as well.
Absolutely.
But we have to move on to a story of electric vehicle, India's ambitious electric vehicle dream. There are two stories that are coming by the way of EV. One, of course, is Indian government's mega EV push. Let's quickly pull out those graphics on our screens.
This is after the PLI.
This is after PLI. This is after FAME. Government is now hoping to come up with a phased manufacturing plan or PMP scheme, which is in works for EV industry. Now, PMP is likely to provide graded duty structure to fast-track EV transition, especially for companies who are now showing interest for the very first time, including Tesla, Foxconn, etc. And on top of that, this is going to be another added-on scheme. It's going to be a bundled-up scheme. PLI will continue, FAME will continue, but now an additional scheme which is hoping to and likely to provide incentives to meet domestic demand, create base for exports. Now, India, of course, hoping to be an export base for a lot of EV players. Tesla, BMW, Foxconn are all looking to invest into India's EV ecosystem. In fact, Tesla very recently said that we will bring our entire ecosystem to India, from battery manufacturing to components to local parts. All of that will happen in India, but it can't happen overnight.
Yep.
Hence the need for a scheme that will help these companies set base, set a structure, but in a phased manner and in a phased fashion, Krishna. And all of that, I think, augurs well for Tesla, likes of BMW and likes of Foxconn. But
Right.
good news as far as Foxconn is concerned. Let's move to that story about Foxconn hoping to make India its 4th largest export base. Now, Foxconn is betting big on India. And let's also get in Avijit into the conversation. Avijit, Foxconn, we are given to understand, is hoping that India will be its 3rd largest global electric vehicle hub. It plans to supply 5 to 7 lakhs EVs, capture 5% of EV sales worldwide by 2025. But in all of this, I think good news is that it is hoping that India will help realize its dreams.
Yeah, I think, Shweta, that's a very good news because I think they are in talks with the Tamil Nadu government, if we can believe the news reports, and they want to relocate some of their manufacturing. The point, the larger picture here is India is really desperate to get a share, get the number of penetration, the share of penetration of EVs in India. Because if you look at that ICRA report, 2 reports we have got, one which came out in around 2020 and one very recently, it showed that India needs to desperately catch up with its EV penetration, which lagged at 1.5%, I think, in last year. And that's nowhere near the 3 to 4% mark it had said it should have by 2025, the ICRA report said. So if you put everything in perspective, we really need this phased manufacturing plant, which the government is planning, and we need to go the whole hog to get EV manufacturers in India, be that Indian, be that people from abroad, but we have to get it right, because that 2030, that 30% by 2030, which is the penetration that the government is aiming for, looks like a very far we are far away from that. So we have to put in all our effort. The government has to put in all its efforts and shape whatever incentive it wants to offer to get the EV manufacturing plant up and running. So right. I think that's a very, very important.
Abhijit.
Yeah.
The plans is to have 30% electric fleet by 2030. Plan is afoot. There is now a new scheme that is in the works. We are given to understand. Papers have reported this morning. We don't have details out. We haven't been able to verify them independently, but newspapers are reporting that there's going to be an additional scheme to help all these new companies who are now showing interest to set base in India to start manufacturing in a phased manner. We'll keep coming back to EV story, but let's shift focus and end this bulletin with what has been a bumper box office over the weekend. 2 wonderful, much awaited movies, and people flogging into cinema screens to watch these movies. I couldn't get a ticket, by the way.
I don't want to talk about the actual quality of whether these movies are good, bad, ugly.
Doesn't
reviews.
matter.
It doesn't really matter at this stage, because Rajinikanth's Jailer released, bear in mind, not on Friday, but on a Thursday. On Thursday, on a proper weekday, that film managed to rake in around 48 crore rupees across the world on just day one. And in the first 4 days of its release, from Thursday to Sunday, it is already crossing the 300 crore rupee mark. That's the kind of bumper opening.
Rajinikanth for you.
That's Rajinikanth for you. The kind of hype that Rajinikanth generated with Jailer, the promos making it look so good, and delivering. As far as, and it's the second fastest Tamil film to reach 300 crores in 4 days. Wonderful. Guess which is the first, who was in the first fastest film? Rajinikanth again. It was a film called 2.0, which made more than 400 crore rupees in the first 4 days. So it's Rajinikanth competing with Rajinikanth essentially at the box office. Now, as this was happening, and you're thinking, this is Rajinikanth, this is Tamil, a lot of South India.
No, I'm not thinking that at all.
No, and it's fact of the matter, a lot of the collections.
The reality has changed, Krishna.
The thing is that the collections for, how did we see a bumper opening, Shweta, over the weekend? 2 films, one is very south-based and one is very typically north-based, which is Gadar 2. And a lot of us over here would not be, would not know how well did Gadar 1 did. Gadar 1 beat Lagan in its collections. Gadar 1 was financially a bigger hit than Lagan, which released in the same day. Gadar 2 made 40 crore rupees on day 1. So, and 100 crore rupees in the first 3 days of its release. People have seen coming to movie theaters in tractors. That audience, that audience in the North Belt, a rural audience, many of them showing up in huge numbers and making, that's what I'm trying to say. It's a fascinating country India is. All your urban centers and South Indian centers going crazy over Rajinikanth. Unfortunately, Rajinikanth's Jailer's Hindi version not doing all that well. But as far as the Hindi audiences go, you have Gadar 2 doing really well, and OMG2. A lot of discussions in social media. OMG2, movie on sex education, but meant for above 18-year-olds. Great word of mouth for OMG2. Pankaj Tripathi in it, Akshay Kumar in it, and OMG2 also raking in close to 50 crore rupees in the first weekend. So 3 big hits in one weekend, and that weekend is not over. Shweta, bear in mind, we're in the middle of a long weekend because tomorrow is a market holiday. Tomorrow is August 15th. So we'll have to actually gauge the collections come Wednesday.
Absolutely. Better numbers, I'm sure, come Wednesday. Gadar 2, Jailer, OMG. I think it's going to be a gala weekend and a gala extended weekend for movie lovers and movie buffs out there. By the way, the tickets for OMG2 are not available. I tried watching over the weekend. I couldn't get my hands on a ticket. So that tells you how audiences are flocking to theaters to watch these movies. We'll, of course, keep getting you numbers, and we'll try and run those numbers once again on Wednesday when we'll have a fairer picture of how much money these new releases have raked up so far. But I think that's all we have. That's all the time we have on this show. Thanks very much for watching.
मैं इमरान अहमद खान न्याजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.
Imran Khan may have bitten a bit too much, more than what he can chew.
Implosion. This and more, streaming on world's first news OTT, News 9 Plus. Download now.
Ruthless, ambitious, manipulative, powerful. That's how the world knows Xi Jinping. And he's got even more powerful now. What drives China's supreme leader? He's the man who has threatened to annex Taiwan.